Hey, welcome back, guys, to another edition of Forest Tech Magazine. I want to welcome our new subscriber. What we got here is Jimby DeGrave. I think I got that right. I'm not sure. If I didn't, I apologize, friend. Hey, but once again, I want to thank everyone for tuning in. Before we get too far into this today, I want to go ahead and do our disclaimer. Disclaimer goes a little something like this. Any and all information given to you by Forest Tech Magazine should be considered to be for informational. I'm sorry, it should be considered for educational and informational purposes only. On educational and entertainment purposes only, rather. Sorry, still a little sleepy. Um, and nothing that we share with you should be considered to be financial information or financial advice. So, if you are in need or you're seeking financial advice, then our suggestion to you would be to go out and seek the assistance of a licensed professional advisor. All right, great. So now we got that out of the way. Let's get into why you came here in the first place, and that is for some trades, right? Now, let's look at something. I want to start off. Just ignore this chart in front of you, please. There. All right, now let's look at this one. Let me get this right here. Hold on 1 second. Not sure what's going on here, but want to get rid of that. All right. All right, so look at this right. This is the Great Britain Pound New Zealand dollar, and I will tell you guys, I know everybody was saying, well, Lewis, why the show's been so short lately is because there's not much to talk about because haven't really been in a holding pattern, but we are doing what we're doing right now. It's basically being in a I want to say a confirming pattern or a forming pattern, right? And it should finish playing itself out probably here over the next 24, 48 hours. But if you notice right here, you have this currency pair is clearly going down, right? It's making lower lows, lower highs, going down, had a little bit of a pullback here, made a lower low, pull back up, went below that lower low to make a new lower low, right? And it's like now shaping up to make a lower high. And so what we want to do when shapes up to make that lower high, then we want to do is we want to look at that next price action just to confirm that, hey, you know what, price is going down. And that's when we want to start looking at getting our sell entries in place. So we're going to be looking at getting some sell entries and really get sell entries in place here shortly. And then we're going to look to extend those out. Now, if you notice right here, we have our fib extension on this pair. All right, so our fib extension just essentially tells us that, hey, you know, here goes the A, here goes the B, right? This one right here, believing is the C for this particular pair, which is great because it lines up perfectly with this area of support, which turned into resistance for this currency pair. All right, so essentially price pulled up through that what used to be support and now turned into resistance, and then it pushed back down. And it looks like it's trying to make its way back to this D extension. What we're going to do, just because you know there's no guarantee that it's going to hit this D extension, but this is our target. So what we do when we do decide to get into this pair, we'll probably pull our take profit somewhere up here, right, a little bit higher than what our D extension is, just to give us a better opportunity to be able to hit our D extension. As long as we're getting at least 100 pips, I think that's great as far as a return for our risk. And we definitely want to try to make sure we got something where we have like maybe a 2-to-1, 3-to-1, or 1.5-to-1, whatever, our risk reward ratio, so as to ensure that our take profits are at least more than whatever it is that we're going to risk, okay, on the trade. So with this particular pair, once again, what we're doing is kind of waiting. It's pulled back, and it looks like it's taking a little bit of a breather right now, all right? So today it may pull down, or it may close up today, and then tomorrow start making that move down. What we want to do after, at the close of that move down, then that's what we want to look at. Start trying to get our entry points, and our entry points would of course come in on an hour chart. Now, when we do our entry point on an hour chart, typically that's where we're also going to want to look at doing our take profit. We just understand that there's enough take profit between where we get in on the hour chart and where we line up on the daily chart that we can be able to maneuver over the next couple of days or whatever while the price is making this move down. Ideally, that's how you want to trade it and not just trade out the daily chart. And the reason being is because, as you can see, price moves in waves. So as it's waving down, There's gonna be opportunity for you to get in. There's gonna be opportunity for you to take profit, and then there's gonna be opportunity for you to get back in again and take profit again and once again, right? So maybe several opportunities for you to take a profit while it's waving down versus if you just stay in that one position. So let me show you what I'm talking about here. So if you look right here, right? Right, price is obviously moving down. Let me put a fib. Not really work. Let's get out of that one right here. Maybe it'll look better here. All right, so boom. All right, so here's your A, B, there's your C, right? Came all the way down to your D. So that was one opportunity to make money. Then you got your A, B again, and then you have your C extension potentially here. I'm sorry, yeah, C, and then it's going to extend all the way down to your D coming up. So there's actually two opportunities right there to be in a trade, figuring depending on how much money you had or how much leverage you had on that particular trade. Let's see here. That was 284 pips for that one. People off here, so we got that. I'm just throwing some examples. These are not like 100% examples. And there's another 367 pips on that one. This is between all right, so you had one was 284, you had another one was 362, I think it was. So that's over. Let's just say, let's just say 650, 650 pips, right? No, that's not 650. Let's just say what it is. Sorry, third grade math is killing me. All right, man. Let's say 284 and plus 362. Go back. Oh, I was right. I was close. I estimated it around that. So yeah, so let's say it's 650 pips, right? Whereas if we just came in and we, just kind of plotted this out from the 6 up until the day, we're talking about 421 pips. Or if we were able to somehow or another miraculously, which it happens. Kitchen. I mean, yeah, even if we got in at the 26, right, at the close of that day, and went all the way down to the low of the chart, I mean, it's still only 482 pips. Now, the thing to remember is, that'd been great, either way to make those pips, right? But here's the point, and here's the thing to remember, is that if we do it off the daily chart, that means that we went in, we set our risk, and we put that leverage in, right? And the way I trade, I'm not really typically adding any more to the position once I lock it in, right? So if I'm just trading one standard lot, that's one standard lot, so that's $4,820 or whatever that's going to be made on that trade. Versus if I go in, I'm trading out the hour chart, and so that first move, that first wave, we go in, we make. And that first wave, we made what? 280 or 280 some dollars. All right, 284. I'm sorry, 284 pips. All right, so maybe I do a standard lot on that one. So that's 2,840. Right, but now because I made this extra money, right, this $2,840. Now I'm going to think about using that when I go and leverage up because remember, it's all about compound growth. So since I made that, now I can use that money to help make an increase on the return when I go back in and to place the next trade. For the next trade is like 364. Once again, so now I might not, I might not just choose to do a standard lot. I might choose to do 2 standard lots. So instead of making $10 off each pip, now I'm making $20 off each pip, right? And so instead of making the just 3,840, now all of a sudden, now I'm going to be looking at 6,000 and some odd dollars placing that trade, right? 7,680 rather for making that same trade that I before, but I was only using standard lot. So that's the whole benefit of sometimes coming down to a smaller time frame because now you're going to have multiple opportunities to get in and out of that particular trade, and then also you have a good amount of opportunities as well to be able to go in there and use some leverage to increase the amount of return that you're going to get on that particular trade. So once again, when we get in here and we start to do this, we're definitely going to use some leverage with this, and we're definitely going to trade out the hourly chart, not on the daily chart. Daily chart can help us show our overall target, but we're going to be looking at some getting in and out of the currency pair a couple of different times. Just using the hourly chart, and if you want to trade a little bit smaller than that, you could. I mean, you could go down to like a 30 or 15. I've seen some people trade off 5. I don't really recommend those too small because then you just kind of get into the noise of the market, and then you can probably get whipsawed around a lot. But if you're able to do it and it works for you, go for it. Just that I personally don't necessarily do that. I like to go down to the hour. It's probably going to be the lowest one I look at. Then I might just monitor it off of a 10-minute chart or something like that. Like I said, the smaller you get, the more it kind of scares me. I don't like leveraging with a whole lot of money off of smaller charts. And maybe at some point I may grow to get to that comfort level, but for right now, not so much. We'll see how the future plays out. Maybe something we entertain, God willing, if we're able to be here in the 2019 and we're still trading. Okay. So let's get out of here. Let's look at the next pair. So once again, this pair right here, let's kind of go back. I know we kind of got a little sidetracked there, but just go back and look at this one again. It's definitely setting up for an entry, for a sell entry, I believe. We're going to wait for this thing to finish pulling back, and then we're going to get some confirmation that prices is moving downward. And once price begins that downward move, we're going to get in there and be a part of that, and definitely leverage up when we get in. Still be cautious though, because you got to understand that Great Britain Pound is this is the middle of some historic changes right now. So depending on what information comes out fundamentally or just newsworthy wise, it could have some drastic reactionary movements in this currency pair. All right, so the next one here we're looking at is the Great Britain Pound, Canadian dollar. As you can see, price has retraced all the way back up to this area of resistance here, right? So it's going to be key to look at this and see what price is going to do next. I believe, you hear resistance, so obviously my obvious answer would be to short this thing. But, it has had situations in the past where it's pushed through resistance and went to the upper level of resistance before it came back down, right? And as you can see, it has there, right? So there's no guarantee that just because it's here, that's going to necessarily means that it's going to retrace back down. But because it's here, that means that this is a good area for us to watch, and we should really be noting price action. So if you start seeing price action over the next 48 hours, point to a downward move, then it might be something where you want to go ahead and start shorting this pair. Be extra cautious because as you can see here in the past, this right here was an extended support area. And as you see, as the price moves along, it comes down, it gets close, it's nowhere near, it gets nowhere near really. So once again, price may be gearing up for a move upward here. It's been trending sideways for a period of time. Typically, price 70% of the time, price is going to move in the direction of the original trend. The original trend was down, right? But it could also mean that price may be U-turning here just because of everything with oil prices. I just don't really know, so I don't want to jump to the conclusion here. Also, too, we're in the last month of the year. There's a lot of stuff with people closing out positions and just kind of getting their portfolios in order to start the 2019 trading year. So just want to be cautious going in. Don't get overexcited by anything you see. But if you're going to be trading, make sure you use your stops and make sure you use a lot of caution. Okay, don't throw. Now's not the time to throw caution to the wind. Definitely not. And as you can see, it's a little bit closer. It's a little bit more insight into prices hitting off that level. Came down, came back up again. It's making higher highs, higher lows, higher high, higher low, higher low, higher high, higher low, higher high, higher low. So the question now would be, will it make a higher high? Try to push back up through here and wind up getting pressed back down. So that might be considered a little lower low, but the high is still lower than the low here. The lower high or the higher low is still higher than the higher low here. So hasn't completely reversed as of yet. And that's why you want to wait before you get into a trade and let price kind of help you decide which way to go, because if price is making higher highs and higher lows, and the market is moving up, and if the price is making lower lows and lower highs, the price is moving down, right? And you just want to trade on that momentum. That's all. You don't have to go out here and try to reinvent the wheel. You don't have to try to find the exact moment that the price U-turn. If that's what you're doing, then you're losing money. I guarantee you, 100%. I don't even have to see your trades. If you're trying to find where the price is making an exact U-turn, if you're looking at stuff like this right here, right, and price is going to make an exact U-turn when it hits this bar, are you going to say, hey, price is going to make an exact U-turn after you hit this Fibonacci retracement and that? You're losing money. You're losing a ton of money. These bars, support and resistance lines, all this stuff should do is be a reference for you. It's an area where you kind of want to pay a little bit closer attention to what's going on in the market. But at the end of the day, the market's going to do what it's going to do, regardless of what you got drawn on your screen, regardless of whatever charting software you're using, regardless of whatever bots you're using. The market's going to do what it's going to do. The ideal, though, is to get comfortable and to get confident on a consistent basis. We're looking at these areas on the screen and kind of get an idea where the price may U-turn or the price may change, and then go in and use good sound money management strategy to place a trade in hopes of capitalizing off of that potential U-turn. Like I said, potential U-turn, because there's no guarantee that it's going to U-turn, no guarantee it's going to move in the direction that you predict. But if you have a strategy going in, you're more likely than not to be able to get some money off of these trades. So anyway, so let's look at the next one here. Once again, price moving sideways. This is the Great Britain Pound Japanese Yen. Very difficult one to trade, and I've already told you guys why. But at any rate, price is back here by the support. Once again, when it's a support, I'm typically screaming buy. But this too may be one you want to sit on the sidelines with and just kind of wait for a minute to get a little bit more confirmation what the price is going to do. Because as you can see right now, there is a pullback in this particular currency pair. Yesterday, it was push up. Today is push off. It seems like today's maybe a risk off day trade for this currency pair. So I don't know. If you feel comfortable going and making a buy, go ahead. I probably don't at this point, but we'll see. This is an area of recognized support in the past, right? So it has a high probability of being still a area of support now. And then, of course, your take profit is going to be up here by your this next level of support here as well. Now, just also kind of keep in mind, too, that area of support slash resistance, there's no guarantee, right? So you just want to, when I look at these trades and I look at these things, I show you these not because I'm saying that you should trade each and every one of these. I'll show you these right here because what you should be doing, you should be saying, hey, listen, I got a limited amount of money, limited amount of time. What is the best setup on the board right now? What's the best freaking setup on the board? Right, matter of fact, when I look at my trades and I look at what I want to try to do, I really try to look at what is the top 3 setups, because I don't have an unlimited amount of money. I got a limited amount of money. So what I want to do is I want to make sure I'm hitting the top 3 setups on the board. And so I'll look at each one of these right here. And if something looks really good, I'll go ahead and get in. But if it doesn't look good, what I'm going to do is I'm going to do this right here. Go to the next one. All right. I'm going to find something that looks a little bit better. Right. And the reason being is because there's no need trying to force the trade. Now, this one right here, the Great Britain Pound, Aussie Dollar, right? Of course, the Aussie Dollar is really good because, of course, this one has been really good because of the strained relationship with China and all that good stuff. I would expect that this one right here to already start heading south by now, just because of the fact what's happened with U.S. and China with the tariffs. But as you can see, it's still been Aussie's been weak on this one, and the Canadian dollar's been a lot stronger, so it's been able to pushing up. Now, it just could mean that because Great Britain pound feel excited because the U.S. is relaxing this trade war with China, so they feel like that hey, it's going to be easier for everybody to trade with China and blah blah blah. I don't know, right? But it's something to be aware of. Right. You also notice here we are in a Fibonacci sequence, right? And it's already had 1, 2 completions. We're working on a third potential completion here. It doesn't look like it's too far off, and it looks like it's not too far away from another support zone here. Probably will set my target to be around here. Now, let's look at this right here. So this is your A, this is your B, potentially this is your C, and we're pushing down towards your D extension. As you can see, price bounced off of the support zone. It's coming back up towards this resistance. So price could make another run up here towards the C. I'm more so anticipating that it gets a little bit closer maybe to this support / resistance, and then stop here right here to kind of watch what's happening with this pattern. I wouldn't trade it right now. Once again, probably the next 2 to 3 days, you'll see a little bit better as far as what's going to happen. Right now, you do got some upward momentum. I wouldn't call it a upward. Here's another way where people get trapped too, and unfortunately lose money. Let me show you this real quick while I'm thinking about it. So you see this right here. Obviously, price is moving up, right? So first thing somebody says, "Oh, price is moving up, so I'm going to buy." All right. So then maybe they're going in and they'll look and they'll do something on the hourly chart. Right, and so yeah, see you got higher low, higher high, 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 and you're like, wow, man, we're making money here, making a killing, right? And it's true, price is moving up. The only problem is that you don't know if this price is really moving up or this price is making a pullback. Right, and the problem is when they're making a pullback, there's really no rhyme or reason to it. It's just pulling back. Its price has been exhausted because it's made its move, in this particular case, down for so long, and now all of a sudden it just needs a little bit of a breather to kind of pull back a little bit. And that breather can end at any given time, and then that downward trend can resume. And the problem is that most people, they get caught up in that. And then that's when they decide to buy right now because they're searching for tops and bottoms instead of just trying to figure out, well, which way is the momentum going? Which way is the overall market momentum taking me? And if you can figure out which way the overall market momentum is taking you, that's the key. That's what you want to do. If you can do that, then you're going to win. You're going to make money, and you're going to, it takes a little while. You make it over time because you're not going to be getting in trading every single day or every single time. A lot of people seem to love to do that, to trade every single day. But it's not necessary to make consistent money over time. What you want to do is just look for really good setups, trade then, and use leverage appropriately, and you'll make money. Okay. So for this particular period, like I said before, it's in a downward trend, so I'm not looking to buy at the moment. Right, I'm not looking for any buy entries. What I will be doing is looking for sell entries, and we want to make sure that the sell or setup is in place on the daily chart before we go in and start selling on the hourly chart. Even though I know that there's a pullback there, and a lot of people will be, "Ooh, let's jump in here and start buying." I wouldn't want to necessarily be one of those people. If that's you, that's fine. I mean, once again, if you're making money from it, I'm not knocking it. I'm not gonna tell you not to do it. I'm just gonna tell you what I'm not gonna do, and that's it. Sorry about it, guys. Looks like we got disconnected for a little bit. So, um, all right. So here goes the. I don't know how long we were disconnected, but just kind of go back over what we were talking about. We were just saying that a lot of people get burnt in the market because right now they'd be looking at this and say, "Ooh, 1, 2, 3 days going up," and they want to get in and they buy, and they think this is an uptrend or they think this is a U-turn in the market, right? And they go in and they buy, and then the market turns against them, and then they want to get topped out or knocked out. And the reason why I say that is because even though the market's bounced off of this support zone, there's no guarantee this is a U-turn, right? This is a support zone, right? And we don't know how long the market's going to support this uptrend, right? That's great it did it, but we don't know how long it's going to be there. So before we kind of get into this and say, hey, this is a buying area and we want to get in and start buying, we need a little bit more confirmation of price. Because when market just kind of reach an exhausting point and it's just, it needs a breather. There's no telling how long it's going to breathe. It could breathe for a day, it could breathe for 2 days, it could breathe for 3 days, 4, whatever. Or, it could breathe for just for a couple of hours and then it starts making its turn back down. You just got to be real cautious and understand that the overall momentum of this trade is moving down, right? And that's how we want to trade, with the overall momentum of the market. We don't want to trade against the momentum of the market. We want to trade with the momentum of the market, right? So now price, the way that we would consider this to be a buy signal would be is price has to move up. Price comes back down a little bit, and price begins to move back up again, right? And definitely for price to break this this higher high right here, or this lower high right here, that would give some merit to the fact that price is actually making an uptrend. So it definitely could be a U-turn. So remember, the AB move, right? It's not necessarily the move that we're looking to get in on. What we're looking to get on is that C to D move. That's where a lot of the energy is in the market. That's where a lot of momentum is in the market. We can have a little bit more certainty going into that trade. The AB move is for the risk takers. That's probably for the people who got some inside knowledge or some insight to what's really going on, so they understand that, hey, you know what, this thing is getting ready to move the opposite direction. So just kind of think about this situation right here. This right here started in, let's see, August, right? Going all the way up to October. Looks like, okay, it looks like market is making a nice little move up, right? Cool, right? If you start shorting this thing October 11th, most people will say, okay, maybe just a little minor pullback before it continues up. No, this right here was a straight reversal of that previous movement, right? Boom, because price went down. Here's your AB. Somebody getting into that first AB. If you don't know, you're not going to know, right? And then it hits that C, and then it comes all the way down to the D. So then it goes back and repeats that same process over again until we get to the point where we're at right now. So my point is this, is that, no one knows if it's really an AB, Fibonacci pattern is getting ready to start, or if that's just a simple retracement. So the best thing to do is let the AB movement play out and then look for that CD before you jump in. So you get on the second wave, not on the first wave, and definitely not on the pullback, okay? Now, let's look at the last one, which is the Great Britain Pound US dollar. Once again, it's right here at support. The question would be, will it break through support? Once again, what we're looking for in this particular pair, we're probably looking to buy right now, right, because it's at support. And you see the little lines I got right here. This is just a little bit of exercise that I was doing yesterday, just showing folks, right? So one of the ways you can determine if it's something that you want to maybe particularly buy, or when is the area that's deemed buyable, right? Price goes down, hits support, it comes back up. What's going to happen is price is going to cross to this trend line right here, because the trend line right here is down, right? Because downward movement, right? So what's going to happen is price is going to go through that trend line, that downward momentum, and it's going to take energy to break through that trend line, because remember, the trend is moving down, right? And then after it breaks down, then what's going to happen? It's going to pull back a little bit, right? Once it breaks through that downward trend line, pulls back a little bit. And once it pulls back, that's where you want to get in and start your buy, right? Because when you start your buy, after it pulls back, you're going to get some good momentum in here, and you can take it up. Just same thing throughout. You see the same pattern repeats itself over and over again. You know, you got a downward trend, price breaks through downward trend, there's a little bit of a pullback, then it pushes up. Got a downward trend, price pushes through, it pulls back a little bit, then you got to move up. Price is get a downward trend. It has not pushed through yet, so that's what we're waiting for, which over the next 24 to 48 hours, it should push through, maybe if it's going to go up, right? And once it pushes through, right, this is a daily candlestick, so we wait for 1 day where it's a positive candlestick, right? You push through, and then what we're going to do is we're going to wait for that second day for when the price pulls back, and then we're going to be looking for an opportunity to get in, right? And probably what we do is keep our, you know, our entry by like a couple pips above the high of that day, right? Or we just come in over here and we just drill down to an hourly candlestick, right? And kind of look at the same thing, whereas we're looking for these counter trend line breaks. The price is pushing up, pulls back, and then look for that takeoff. So remember, we're looking at the AB movement, and then we're looking at that C and D. And if you look right here, it's the same thing, folks. It's the same exact crappy pattern over and over again, right? So this is your A. Think about this right here. Think of this is your A. Think this is your B. And that's your C. And then you extend it out to the D. That's all it is, right? But it's just a different way of looking at it. That's all it is, man. A, B, you think about it as your C, then D. All right, A, B, or A, B. All right, think about it as your C, then it's your D. All right. So what we're doing right now is we're looking for, you know, this is potential at A. We're looking for the B, which is going to be the extension through that counter trend line, right? And then that pullback is going to be our C, and that's when we know we want to buy in at our C. Always trying to buy in around the C, and then sell at the D. Okay. Anyway, guys, listen, that's all I got for today. All right. About to get out of here. Thanks for tuning in. I appreciate everyone for watching, watching all the rewatches and all the other good stuff. If you guys got any questions, hit me up at questions at Forest Tech Magazine. Try to get to them as much as possible. I know a lot of you guys got a lot of different questions, and trust me, I am trying to get through them. So if I haven't answered your question just yet, be patient with me. I promise I'll get to it. It's very important to me. I want to thanks for all the love, all the support, and God bless each and every one of you. And I will talk to you tomorrow. Take care.